Hey everyone, today we're going to talk about how to fire with crypto. Stick to the end, I'll give you a peek into my portfolio and allocations. Let's go. Welcome back to the channel where me and my wifey document our FIRE journey. Every week we'll document our journey into early retirement. We have a 10-year plan. We talk all things saving money, investing money, blockchain technology, and real estate. If you haven't subscribed or liked this video yet, please do so. I heard that for every like, the market goes up. So smash that button. Today we want to talk about three things. Number one, why Bitcoin's going to go to $500,000 in the next few years. Number two, why you should create a crypto investment strategy for yourself. And number three, I'm going to give you a sneak peek into my FIRE crypto strategy and allocation. What we're seeing more and more is that Bitcoin is a store of value, making a push into its competitor, gold. The global market cap of gold is about $10 to $11 trillion. And right now, as we speak today, Bitcoin's market cap is around $1 trillion. You can make an argument that the price of gold can actually go down. What if we found an island, a Midas Island, where it was just gold? You've seen it. We've all seen the movies where they hunt for the tropical island, the treasure map, and they just find tons of gold. Would that bring the value of gold down? And I think yes. Which brings us to Bitcoin, and the reason they call it digital gold, because yes, you have to mine for it, but you don't need shovels and picks. All you need is some GPUs and a lot of electricity. The difference between gold and Bitcoin is that Bitcoin has a finite number. In the year 2140, who knows who's going to be alive by then, the final Bitcoin would have been mined. There's only ever going to be around 21 million Bitcoins, and already today we have 18.5 million already mined. Throwing that all aside, let's take a look at some facts we know today. Bitcoin's already at a $1 trillion market cap, about 10% of gold's market capitalization. If Bitcoin's going to take over gold's entire market capitalization, which many believe, that would 10x the price of what it is from today. Today's price is $56,000, so if it were to overtake gold, that would place Bitcoin at about $560,000 per one Bitcoin. That's not taking into effect the halvings, that's not taking into effect more institutions and retail investors coming into the market. Number two, let's talk about why you need to create a crypto investment strategy for yourself. If you haven't seen this chart, this is a psychology of a market cycle. This doesn't just pertain to Bitcoin, it pertains to Tesla stock, total stock market, everything. If you don't know, most people FOMO in, buy too high, sell too low, and they get absolutely crushed by the market. This also applies for the acceptance of technology itself. Whether it be cars, TVs, refrigerators, the internet, they all go through a similar market psychology. I would say the technology acceptance cycle is the opposite of the psychology of the market cycle. Instead of panic and disbelief at the end, it's actually in the beginning. We've all seen it. Internet, who's gonna use that? Why are you on TikTok? Why do I need a car? I'll just take the bus, that's too expensive. Why do I need an iPhone? I'm fine with my flip phone. And right on the top, they start criticizing you. Oh, you got an iPhone. Oh, that thing's so slow. It got so many bugs. Useless. Oh, you got on TikTok. That thing's just for kids. You're wasting your time. And then at the end of the cycle, they got a TikTok account. They're dancing on TikTok. They're promoting it to you. They're like, hey, have you heard about TikTok? You should get on TikTok. And that's typically what happens with acceptance of new technology. The question is, where's the opportunity and where is it the best time to have the strategy to invest in these new and upcoming technologies? It's when everyone's criticizing it and making fun of you for it. When they're already on it, sometimes it's already too late. Which brings us to Bitcoin, and we've seen and heard it all literally. The best example would have to be Chase, where in real time you can see news articles all over the place dating back from, 2015 to now, where they literally criticize Bitcoin. And now in 2021, they're offering Bitcoin exposure to all their investors. Not to worry, you didn't miss out on the boat because we're still in a criticism phase. A lot of people still don't believe it, they still don't accept it, and there's still very little government regulation on it. If I were you, I would step on the gas pedal to get caught up because mass adoption regulation, it's coming fast, it's coming hard. If you wait too long, you might find yourself on this end of the market cycle, which is complacency, anxiety, denial, panic, anger, depression, and disbelief. The question is, what's the strategy? What should I do? There's so many TikTokers telling me what I should do. YouTubers telling me what I should do. What should I do? How should my strategy look into Bitcoin investments? Just this last month, there's been so many companies and countries talking about Bitcoin's ETFs. In fact, Fidelity just applied with the SEC to launch the first Bitcoin ETF. Fidelity has $4.9 trillion of assets underneath management. Let's say asset managers and Fidelity push this into their high net worth individuals to allocate just 5% of their savings and investments into the Bitcoin ETF. 5% of this would be $250 million. And that's just from one company, from one country, and one ETF into Bitcoin. Let's just play devil's advocate and extrapolate. Let's just extrapolate that across a lot of companies, a lot of countries, and a lot of ETFs into Bitcoin. What would that mean for Bitcoin? Now, an ETF can just track the price and not necessarily have to hold Bitcoin, so maybe that doesn't really influence the price that much. However, it does do a lot for adoption and the belief in the ecosystem. Yes, an ETF doesn't have to hold underlying Bitcoin, but what we're seeing now is companies start to hold their balance sheets into Bitcoin. Microsystems was one of the first to invest into Bitcoin. However, since then, Tesla has announced they invested over $1.9 billion into Bitcoin. They're holding that on their balance sheet. In fact, they're actually accepting Bitcoin for purchases of Teslas itself. What's interesting is that Tesla's not selling you a Bitcoin. Once you buy your Tesla with a Bitcoin, they're keeping it, they're running nodes to keep the network safer. Next up is probably Jack Dorsey, who is a big endorser of the crypto space. He owns Square and Twitter. Square's already made big moves in blockchain technology. They are said to hold some amount of Bitcoin in their balance sheets, and they'll make it public soon. They're probably going to buy a lot more. Don't quote me on that. This is not financial advice. I'm not a financial advisor, just some crazy guy on YouTube following his FIRE journey. What I'm really trying to say is that many more companies will probably hold Bitcoin on the balance sheet as a hedge against inflation and kicking out gold as a store of value. Lastly, number 3, what is my plan? I'll give you a sneak peek into my crypto allocations as it stands today. Back in December 2020, I did a how much of a crypto allocation should you have in your portfolio. I'll put a link down below. If you take a look at a screenshot there, my allocation was only supposed to be set at 10%. 10% at that time gave me enough exposure where if I had downside risk and went to 0, I wouldn't have felt anything. Since December, and actually since 2017, I haven't put a dime into the crypto space. I still haven't even pulled the trigger on buying one altcoin, nothing. Put $0 in. That same crypto portfolio that was at $23,000 has now ballooned into $53,400. If you remember the video I did, I was going to do 10%, about $250 to $300 a month into the crypto space, which I've been sending over to the platform, but I still haven't bought anything yet. Before we break down what's inside this crypto portfolio, let's break down how much I'm going to invest moving forward. I firmly believe that you need to get your basics down first. Get your feet wet into investing before you even get into the crypto space. And that's why I like FIRE so much, because it really promotes a safer way to invest, in my opinion. Last year and also this year, my strategy has been always to maximize my 401k contributions and my Roth IRA. If you want to see what the allocations are in those holdings, I'll put a link down to the videos below. Outside my 401k and Roth IRA, I was doing about $800 a month into a regular Fidelity brokerage. What I'm doing today is that I'm going to change my 10% allocation to 25% allocation into the crypto space. Why am I making such a bullish decision? And there's many factors to this. Big institutions coming in, less volatility, and also me being through a market cycle. Good or bad, that's my strategy. I have no bonds, so I really have less drag. If I see Bitcoin as the gold equivalent, then having digital gold into my stock portfolio is actually very beneficial. What you see highlighted in yellow is my 10-year FIRE goal projection estimate. That estimate is about $853,000. About $342,000 of that is into my 401k, traditional total stock market index funds, things of that nature. $200,000 of that is my investment into real estate and real estate syndications. About $93,000 into a Roth IRA, and the rest would have fallen into my Fidelity brokerage account, which you see right there is about $115,000. The question is, do I feel safe risking $115,000 from my Fidelity brokerage into the crypto space? If you go back over to my 10-year goal, that's only about 15% of my overall portfolio that I'm risking. To me, it's not really a risk because Fidelity brokerage, I would have been in the total stock market index anyways. Here, I'm capitalizing on Bitcoin's growth and also the digital equivalent of gold itself. Say I kept this money into the brokerage firm, total market index, I would have contributed $86,000 with a projection of $114,000 in return. At the end of 10 years, would I be okay if all this money, $86,000, was in the crypto space and it stayed the same or dipped down a little bit? And the answer is yes. It would affect my bottom line a little bit. If it crashed down to 0, I would have lost out on $115,000, and about 15% of my projected goal would have been down the drain into the toilet. That's okay because that's a decision I chose, and I really don't think that's going to happen. However, what's the upside? What you see here is the projection of Fidelity total stock market returning 7% a year. Is it possible that my investment into Bitcoin and other cryptos in the space in the next 9-10 years yield more than what the total stock market index will yield? And answer is yes, no, maybe so, we don't know, we're all speculating here. With every passing day, we're seeing it as less of a speculation and more as a viable asset to invest into. Not only viable, quite lucrative too, I might add. Will there be wild swings up and down? Not as wild as the one I've been through. Hopefully not as wild for you as well, but you know, it's gonna go up and down. The question is, can you stay the course? Can you dollar cost average and create a good plan for yourself, just like you would on your regular retirement investings? That means rain or shine, you're still investing, you're still putting money in. From 2017 to 2021, I didn't put in a dime into the crypto space. My initial investment is around $37,000, and a lot of it was on credit cards. I don't recommend it. My initial investment was $37,000 minus what my crypto is worth right now. I would have profited $16,400 from 2017 to now. If I sold everything today, which I'm not going to do because there's major tax implications here, and I just did my taxes, I'm not going to sell it, I would have profited $16,400 for the last 4 years. That's about a $4,000 profit a year, about 11% return on my money every single year. Bitcoin grew over 500% in this year alone. How come I only had 11% return? And that's because I did not have a crypto investment strategy. And that, boys and girls, means do as I say, not as I do. Then again, that was back in 2017, which is likened to the dot-com boom. Everyone got into these crazy ICOs and got crushed. I was one of those people that got crushed. However, I held along and hodled along and got all my investments back. Every single month, I'm doing about $3,000 into investments. So 25% allocation into crypto space would mean about $800 a month. What I'm going to do is take $500 a month that was put into Fidelity brokerage, total stock market index, and put it into the crypto space. As you can see, 75% of my investments are still into traditional 401k Roth IRAs. Alright folks, what you see above is my personal allocation strategy. Please don't follow it. Do your own. What's few saves to you, what you want to do, what kind of exposure do you want. If I was to mimic my 401k and IRA, then I would just have two things, Bitcoin and Ethereum. It's hard to compare these crypto investments, companies even, to what we have today in my traditional 401k and Roth IRA. If you had to compare, then Bitcoin would be compared to gold, Ethereum, probably Google, USDC, which is a fiat coin, and also would be your large, mid, and small cap companies. If you're a first-time investor in crypto, I wouldn't do any alts at all. That's all speculation. That's like buying a stock versus investing into an index fund. For most people, holding Bitcoin alone is enough. ETH, you might want to hold just a small percentage of as well. A lot of people would say that Ethereum outpaces Bitcoin growth all the time, but you know what? I'm on the safer side. I'm not quite sure. The only altcoins I have today is Dragon, XLM, and BAT. And the reason I have them is because I had them since 2017. I haven't bought any new alts, so I haven't looked into it yet. Learn from my mistake. I got into the Dragon ICO. It went up all the way to $4 per token. I could have made $40,000 in profit. However, I didn't sell and I just held it all the way down. Dragon is an interesting coin because it was developed by people that worked at Disney. It's no longer affiliated with Disney. However, the same original developers are still there and they're making some strides and leaps. I'm not promoting Dragon, but that was one of the only altcoins that I was excited about back in 2017. Now there's many better performing ones now today. Guys, get used to crypto investment and start learning about it now because it's not going away. All the YouTubers are going to start talking about it, and those who don't want to, they're going to start talking about it soon also. There's too many positives about it. It's efficient, it's decentralized. That's where finance and currency is going to go to. Of my $800 every single month, 70% is going to go to Bitcoin, 20% to Ethereum, and I'll put 10% into some altcoins. I don't know what altcoins I'm going to do yet. I don't know how to evaluate them. I don't even know how to evaluate regular stocks. That's why I got into the FIRE journey, because I don't know how to look at stocks. Why then am I putting 10% into altcoins? Because I want to start learning about the space. I want to start getting educated about it. And there's some really interesting topics that really pique my interest, like NFTs, for example. If you haven't seen my previous videos, I love the NBA, I love basketball. I've been a basketball fan my whole life, and now they've created collectibles with NFTs in it. I don't claim to know how to invest into these early companies that are disrupting spaces like collectibles, like NBA Top Shop, who's investing in the NFTs. But you know what? $80 a month? I could look into it. Keep in mind, I only have 10% of my 25% looking into speculation. 99% of my portfolio is in real estate, 401k, Roth IRAs. And now, Bitcoin and Ethereum. Number one, what should be your crypto investment amount? You need to figure that out for yourself first. Here's something to think about. When people retire, they tend to change the allocations from something speculative to something safer. So from stocks, more to bonds. They reallocate from, let's say, 60-40, 60% stocks, 40% bonds, to now a 50% stock, 50% bonds. As they get older, they change the percentage more in favor of bonds. Eventually, it could be 20% stocks, 80% bonds. What you can do is reverse engineer that strategy into the crypto space. Meaning right now, if you're 0% into the crypto space, you might want to start off with 5% into the crypto space and 95% into regular investments. Next year, if you see wider adoption for crypto, maybe you want to reallocate to 10% crypto, 90% traditional investments. Fast forward 5-10 years, if it's something that's really safe and secure and you see the growth, maybe you can allocate 50% of your allocations into crypto and 50% into traditional investments. In my personal opinion, crypto investment will be taught in schools. It will be taught just like traditional investment fairly soon. Right now, we're just ahead of the curve a little bit, which is great because this is where the wealth building stages can actually exponentially grow. If you get in later, it's still going to grow, but not exponentially so. Once again, just my opinion, not a financial advisor. Forecasting my investments out, here's how it's going to look like for the end of 2021. You can check back at the end of the year to see if this is true. Real estate will still be a majority of my holdings with about 41%, stocks and bonds about 33%, and crypto would have jumped to about 26% without growth. That's just the contribution that you just saw from the $800 a month. 3 months ago, my 23,000 in crypto jumped to about 56,000 in crypto without any investments at all. Zero, nada. I would love to be wrong about this and that you come back 3 months from now and my crypto allocation has jumped from 62,000 to about 120,000. That would be great. These is one of the times that I wish to be wrong so much. Truth be told, that's super speculative. Wishing for 100% jump in the asset allocation is just absolutely insane. But if there's any time to see it, it is now. You can never say that this channel is not adaptable and flexible because we like to cover all things. Not just blockchain, real estate, and traditional investment. If there's something new that comes along, we'll take a look at it as well. There's a very interesting article that just came out that said, millennials, they have so much money they don't know where to park it, right? Sounds pretty snobbish because it is, but in no way are these guys dumb. They have assets, they have stocks, they have real estate. They're just looking for money to park in other places as well. They're looking into collectibles, NFTs, even the crypto space. This could be the new trend that we're seeing. Personally, I hope more people in the FIRE community accept and adopt crypto into their investment strategy so that we can get more thoughts around this, more opinions, and more productivity, really. I firmly believe that when there's more people talking about this, there's more innovation, it'll just push everything forward. What are your thoughts on hitting FIRE with crypto? In the next video, maybe I'll create a 10-year plan with that and see how that compares with my traditional FIRE plan. Alright everyone, if you watched this far, please subscribe and like this video. It'll help me out tremendously. That's it on today's video. Let me know if you have any questions, comment down below. I'll see you guys next week. Peace.